Hello, I'm Greg Bell, and welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights that boost your trading potential. Coming up, chip stocks continue to rebound after last week's sell-off. Investors are assessing the outlook for artificial intelligence, interest rates, and this week's key inflation data. Plus, our trader debaters, they're here to break down the outlook for Darden Restaurants, and they're going to debate whether the parent of Olive Garden still has room to grow. Later, with SpaceX's highly anticipated market debut expected this week, we're going to lay out the key bullish and bearish arguments surrounding one of the most closely watched companies to hit the public markets in years. That is all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. Half an hour to the trading day. Let's jump into the S&P 500 after that tech-driven sell-off on Friday for a second day now. Yesterday, a bit of a rebound again. It's being led by a lot of the tech names and the chip stocks that really sold off pretty hard on Friday. So we got some green on the screen, almost a full percent at this hour. Let's jump into the heat map, and we'll start to see what is going on here in terms of the stocks that are moving. And when it comes to that, it is the tech names. Noticing some of the chip plays, the memory plays got hit pretty hard. Where's the green on the screen? I can see NVIDIA just up modestly, but Google showing us a little something. Micron, AMD, Intel, those chip stocks really sold off on Friday. So keeping up the momentum again today. And let's get to our stock of the hour. It is Darden Restaurants. This is the parent company of Longhorn Steakhouse, the Olive Garden, among others. It's been growing sales. Casual dining offerings are actually attracting cost-conscious patrons. So Darden, it's winning market share, but it's also dealing with higher labor and food costs. I mean, the price of a steak lately, have you even seen it? Even the grocery store, much less a restaurant. So, with earnings due later this month, let's dig into Darden with our trader debaters. Joining us now is Hiran Amin and special guest star Brian Rogers from our Direct Investing Educational Team. Welcome, gentlemen, and welcome, Brian.
Glad to be back, Greg.
Good to be back again, Greg.
All right, we're going to dig into, before we get going with that debate, though, a quick note to our viewers that the securities and strategies discussed on our show are for educational purposes only and should not be considered investment advice or buy, sell, or hold recommendations. Now back to the stock of the hour, Darden Restaurants. We'll get some time on the clock. You each get your 2.5 minutes to make your case. Then some time after that to counter. So we flipped a coin last week to decide Brian's fate. He had no say in it. I think it was Jay who decided.
I never do.
Yeah, but Brian, you got the bull case. Why don't you kick things off for us?
All right, no, Greg, I think I saw on the show last week you guys were talking about the endless breadsticks. You know, so this is a great segue for me, this story of there's endless growth for Darden in my opinion this week. So, you know, we have those breadsticks, which I love. I've been to the Olive Garden several times, and it's known as being a great total return investment. So in a time right now where, you know, everybody's looking for massive growth and potentially could be going a little bit more towards safety with the AI plays and things like that. It has been known in the industry as a growth and income provider. It has strong profitability, and it has a really strong return on equity with their quality offerings. And because they have 2,000 restaurants, you know, they have those efficiencies. I know you were mentioning like the price of steak is high and they have those labor costs, but they've got it down to a really great science on efficiencies. And they're a cash machine. They generate over $1 billion in free cash flow per year. So, and that oftentimes is because of the income thing I mentioned is often given back in increasing dividends as well. So if we take a look at the chart, if I jump into the chart here, we can see it has what's called a continuation diamond. I know that's looks nice and fancy, and it's a hard one to draw. But really what it does is comes down to where you're seeing that there was a time where there was a bit of a reversal here, and then you start to see it come back where there's higher highs and then higher lows, and then it really consolidates. So I think that's what it's doing right now. It's kind of consolidating as it's getting towards earnings that's coming up, you know, in a few days. And you know, once that happens too, I'm looking forward to see if it's going to continue. And this is often an indication that it may continue to the previous trend, the previous uptrend.
Okay. When Brian comes here, he's always so confident. He leaves a lot of time on the clock. He's
Can I get some of that time?
I have made my argument, and I am at peace with that argument.
I have 4 more things on the chart. We're going to save them for later.
He's going to save him for later. All right. That's how he plays the game. Let's get that clock reset now for here.
Yeah. All right, so I'll acknowledge first of all, Darden Restaurants, they're branded under Olive Garden, Longhorn Steakhouse. This is a home of never-ending pasta, of course. But look, I respect what Darden has built, but there's a difference between a great restaurant and a great stock. And right now, the market is paying fine dining prices for a casual dining business. And here's the bear case on why that is. When you look at the headline numbers, they look better than the underlying organic story. In fiscal 2025, total sales rose 6%, but same restaurant sales were up only 2%. So make that make sense to me. A chunk of that growth came from the Chewy's acquisition and new unit openings. So it's not broad-based strength across the portfolio is what you're seeing essentially out of this. Consensus-style estimates imply only a 3.7% growth next year. In other words, the reported growth rate is going to decelerate materially once the deal-driven boosts are annualizes there that we have. The second, the portfolio is starting to look like a two-person buddy cop movie. You've got Olive Garden and Longhorn that are carrying the plot while everyone else is trying to get written off. In fiscal 2025, Olive Garden comps were just 1.7%. Fine dining was down -3%, and other businesses was basically flat. When you look at Olive Garden as a whole, this represents 45% of Darden's system-wide sales. So when you have this cooling as well as Longhorn even cools modestly, that consolidated growth narrative is going to significantly weaken sharply there. The last thing I'm going to mention is the margins are getting cooked. If commodity and labor inflation outpace pricing power, operating margins could compress even further and limit upside EPS growth there. So roughly, inflation is running at about 5%. Beef is the biggest headwind for them. This accounts for about 25% of Darden's commodity spend that they have, and they are going at 45% fixed coverage. So they're not even going and putting these costs onto consumers. They're absorbing all of this at the cost of margin sacrifice. When we look into the charts, though, Greg, let's talk about what's unfolded here. I'm just going to go back, zoom out for a second. You can see this is a stock that has been making lower highs, and we can see it's in definitive bearish trend overall. We've seen the bottom side of just pick up overall, but it's failing to make new higher highs when you talk about a bullish structure. Here's where we find ourselves most recently. We find itself coming out into these sort of bearish trends that breaks out, it consolidates sideways, and then we find ourselves in a bearish trend. At the moment, it is forming what looks like a bear flag. This is a trending bear trend. However, you see a little bit of action move to the upside, but then I do predict that the price would come swiftly down towards the support at the 190, 180 level. Also informing this, because it's going sideways, as you look at the moving averages, they are just completely flat at the moment.
Lost my bell there for a second. I was hitting my teleprompter thinking, oh, here it's still going. What's going on? I'll wake up now. 3 minutes to counter back and forth. Brian said he was holding back. You got the big guns. The garlic bread? What's going on?
The garlic bread, yeah.
What's your
or the soup. Maybe I'll switch to the soup.
Secret sauce?
The secret sauce, yes. Well, I think, as I mentioned earlier, in the time frame now where people are looking for safety, oftentimes people are going to things like banks and looking at stocks that, is there a safety play? And, I think this is one where, it's not going to take off and go to the moon. We're going to be talking about SpaceX later, so that analogy wouldn't work for Darden. But as you said, Hiran, the same store sales like on Olive Garden, numbers I have that it was more recently, it was 6.9% on Olive Garden was the same store sales increase, and then on Longhorn it was 6.7%. For overall, they have like Chewy's and all the other ones that may be a little bit more of a drag. That was overall around 4.6% of an increase. They have operating margins of around 11% with a total profit margin of 9% more recently. And then
I'm going to challenge you on that one. I'm going to stop you for a second, okay? Because when you talk about net margin, let's talk about the bottom line. That's what matters over here. They've been dropping since 2022. They were about 11% in 2022. They currently sit at 8.6%, and they've been dropping quarter over quarter on this. And the reason they've been dropping is because they've been absorbing this inflation costs that have been coming down, so they do not want to sacrifice traffic. Mm-hmm. So they're really faced with a hard choice. They're not going to be running away from inflation and absorbing that cost for forever. At some point, the market's going to tell them, you got to raise your prices, and that means they're going to lose traffic. So they have two tough choices to sort of deal with, but the outcome seems to be the same. They're either going to sacrifice top-line revenue, or they're going to further compress bottom line.
Well, I know that's an argument on like the fact that you think they're going to lose traffic, but with that, if consumers are struggling, which has been happening and been in the news for quite a while, the same-store sales are still positive. They're not getting into the negatives. I think people are going to still go. Costs are going to go up. But they have the efficiencies. They have the actual system set up within all of the restaurants. They have 2,000 restaurants across the country. They're opening more globally as well. They're opening 40 Olive Gardens in.
Yeah, but this is just accretive. They're just opening new openings to see increased top-line revenue because they're not getting organic growth that's happening. You talked about valuation as well. So yeah, Darden's forward valuation is 18.8, forward PE 11.4 in the EV/EBITDA. But when you look at the competitors in this space, Brinker, which owns like Chili's, Cheesecake Factory, those sit at 12.6 and 15.9 on the forward PE basis there. So by all accounts, Darden is overweight, I would say, trading at a premium compared to these companies. Then the Chewy acquisition was just a bombshell. I mean, they did the Chewy acquisition, but they threw in the towel on Bahama Breeze. This was their own built-up brand that they had since the 90s that they just completely weren't able to have a turnaround story on that by the same management that's still running some of these new brand acquisitions that they did.
I think that was a small element of their business as well. Like, you think here and they're actually, when I mentioned on the stock end, if we go back to the stock aside from the business, I think it's been a solid business. I think the traffic is going to continue because of the fact that people are going away from the really high end. They're going to go stick with those Olive Gardens. It's that local.
They're going to trade down to like Cheesecake and those other places. They're going to trade down to Olive Garden.
No,
the breadsticks might only go you so far.
But from a stock perspective, they're going to like the cash that's coming their way.
I think we missed a perfect opportunity for the camera to have been on you guys the entire time. You come back to me, I'm just eating a bowl of angel hair. Little bread.
I like it.
Little wine.
Should have started with that.
Thanks for laying out the bull and bear cases for Darden Restaurants. Now let's turn to some options strategies to trade it. Before we dive into that, it is worth noting that options trading carries high risk and may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Brian, let's start with you. How could a bull trade Darden Restaurants?
Yeah, with a bull, I'm looking at, as I said, I don't think this is something that's going to take off like a rocket, but you're going to potentially get steady growth to come back to where they were previously. So that, to me, is a good opportunity to look at a bull call spread. You could, just buy a lone call option as well. I'm looking at around that September time frame, so give it a little bit of time to marinate, after the earnings, which is coming up this month. So, it gives you opportunity for a little bit of growth. But since the prices might be a bit pricey on the call option itself, you could do a spread, you can sell a little bit of a higher call and maybe get that window. Which, looking at this, if we go to the charts, I just want to show the actual option trade, but also just to go back to what you were saying earlier here, there's moving averages are just more recently kind of jumping up. The price has jumped up a little bit and it's crossed over as well. So that's why I'm thinking going into earnings, there might be a little bit of a move to the upside. So if we put the trade on, let me just take this off here. And there we go. So if we have the trade, I know it's kind of fairly small. I can zoom in a bit and make this a bit larger for everybody to see better. But we're looking at a $200 high side call that we're selling. We're going to actually be buying a $200 call. So it's a 200 and a 202.50 is the kind of the prices we're looking at as a break even. So we're doing a $5 spread. It's going to cost us about $2.50. So it's almost a 50-50. So if you're doing it at the mid price, it'd be around about $2.50. So what you're hoping for is if the stock goes up above our break even, we're going to start making money, and then we could at our maximum, if it goes above the 205, then we're going to make our maximum of roughly around $2.50. So it's kind of one of those coin toss. If it doesn't go up,
Yeah, what are we risking if it doesn't go your way?
yeah, if it doesn't go up, then you're risking your $2.50 that you're paying. So it's it's one of those things that if it goes up and you think it's going to hit after earnings and go above that 205, you're leaving a little bit of profit on the table, because if it goes way up, you're only going to get that maximum $2.50 profit. But if it goes, ends up going way down, then you're only losing $250 as well.
Okay, interesting possible trade there. How could a bear trade it, Hiran?
Yeah, one of the ways you could possibly look at it is on a directional basis. Again, we're going to be playing that same sort of, taking that same page out of the book. So with Darden, when I showed the charts, it was more often than not, we saw it making these sort of bearish trends. It's obviously consolidating right now, but based on the current supports that we have sitting at the 190 and the 180 level, looking for that downside move, one of the trades you could consider doing is what's called a broken winged butterfly put spread. It's a mouthful, so I'll take you through what that exactly means and why the rationale was with choosing this trade. So one thing I just wanted to point out viewers to was the implied volatility percentile of this stock. So right now it's sitting at 89%, which is close to kind of its highest ranges that it's typically had. What that means is that the options are going to be juiced up And if I just do like a spread or just buy a single put, vanilla one, it's going to cost me quite a bit. So this is why we're opting for doing a butterfly strategy, because we get to sell 2 contracts, which takes in a bit more premium to lower our costs. So here's the makeup of the trade of what I've set up. So we're looking to target the 200, buy the 200 put. That's slightly in the money. Currently sitting at 199 is what the stock is at. We're looking to go far out in time. We're looking year-end and December cycle. So we're giving ourselves a lot of time for this to work in our favor. We're then looking to sell the 175 strike puts, 2 contracts over here. This is what kind of makes the body of the butterfly. And then we're looking to buy the 160 put. Now, the reason why it's broken wing, Greg, is because you see I have a 25 sort of differential between the 175 and the 20, or equidistance. You're speaking my language now.
That word.
There you go, equidistance, exactly. This one wouldn't be equidistance, which is why we're not equidistance in this one. And on the downside, we've got a $15 width. Now, the reason I wanted to do this was also I wanted to improve the loss profile on this trade. So here's how the trade would work. We're spending a net debit of $6 is what this, by doing all of this selling here. That means our break even is at 194. Directionally, we want it to go down, but we certainly want it to go below 194 to start making the big moolah on this trade. And then
the reveal.
Let's do the reveal. So let's talk about the numbers here. What's our max profit? That's going to be $19 here. That's going to happen if it kind of just bullseyes at 175. If we get it right there in that sweet spot by December, we walk away with the difference between the width, 25, minus what we paid, $6. That works to 19 bucks. Now, however, if it starts going below that price, it starts eating away into our profit. So we're not necessarily losing everything. It'll eat significantly in as if it gets down to 160. And the reason why I went with a broken even, because let's say you'd be on a loss of $15 here, but you had a gain of $19 here, you'd still be come out ahead with $4 at the end of the trade there. This is the reason why I do a broken wing trade versus an equidistance one, to improve this loss profile.
All right. Interesting ideas there for our audience. And just a reminder to our viewers that these strategies and this debate were for educational purposes and do not reflect our personal opinions about the stock or how we feel about food in general. We just wrapped up our bull versus bear debate on Darden Restaurants. Now we're going to apply that same thinking to one of the most anticipated IPOs in years. That, of course, is SpaceX, expected to make its long-awaited public market debut later this week. Anticipation is building around what could be one of the biggest IPOs in recent memory, in history, really. So why this isn't a formal debate, we are going to take a similar approach here. Lay out the key arguments for and against the company as investors weigh the opportunities and risks ahead of its expected debut. Hiran, let's start with you. And Hiran, what did you pull here in terms of bull or bear for SpaceX?
I'm bullish on SpaceX.
Bullish on
I should
SpaceX.
say I'm representing the bulls.
You're representing the bulls.
Is what I'm doing. So let's talk about some of the points that you should consider as a bull if you are looking at SpaceX. One thing I'll just point out, there's obviously a lot of conversations around valuation around this company. And if you're looking for a company that's in its hypergrowth phase, you're not going to evaluate on today's losses, or you're not even going to care about revenue. What we really want to measure is the rate of iteration that this business is going by. And you also want to look at segment by segment, and let's talk about that. And also by the fact, if you think the founder is like a modern day Tony Stark, and the universe is an addressable market, and this is how he's kind of bundled this all into this company that's vertically integrated throughout. So we talk about the global broadband monopoly for Starlink, which is one of the components or segments within SpaceX, is not just a science project anymore. It is a high margin toll booth in space, essentially. In 2025, Starlink generated $11.4 billion in revenue. That accounts for 61% of total revenue. It is basically a sticky software business disguised as a satellite network. Then they have the launch, SpaceX itself. This is like built as a cosmic fortress. Since 2023, they've launched over 80% of all mass to orbit globally with a near perfect track record that they have. And I'm just going to remind everyone, SpaceX went from a company that was with scrap metal on the floor, there's pictures you can see on the internet all over, to now being one of the most advanced space rocket companies. They can basically hold a rocket with tweezers. Okay, we've all seen that image.
That does blow me away when I see that.
So that tells you how far they've come, of course. Then when you think about the data center play, they plan to build orbital data centers powered entirely by the sun by 2028. We know data centers are power hungry, and what better than solar energy to do that? So they're vertically integrating this. They've newly absorbed xAI as part of its business with Starlink's low latency data pipes. SpaceX can claim that they can bypass terrestrial power grids and train frontier models at a fraction of the cost. And that's a big thing for a lot of these LLMs and these big hyperscalers there. And then the final thing that you have that I'll talk about, this is kind of my ace up my sleeve that I wanted to reserve, is just actually when they filed S1 last week, they just amended it on Friday. And the reason why they amended it, because they just announced another mega deal, a cloud service agreement with Google. Google is going to be paying them roughly $920 million a month from October of 2026 this year through June 2029. And what this means on the valuation side, a lot of questions were about the price of sales was 100x. This cut the valuation down to price of sales in half, to 50x.
Really?
This does not make this company the most expensive anymore on debut. That gets awarded to Snowflake, which was trading at 80 times the multiple on its debut at IPO. So that's what I'll end. And then last thing I'll say, Elon factor, hate him or love him, whatever you want to call it. He does three things no one else does. He attracts top-tier talent like a magnet. He gets the capital markets to believe in his vision before it even exists. And he has the Steve Jobs one more thing allure, which everyone waits with a bated breath to see whenever he opens his mouth, what's he going to say. So I rest my case.
That's how a bull would see SpaceX. What about a bear?
Well, maybe I wasn't going to do this earlier, but maybe I'll go with the segue. And you said when he opens his mouth, the people are listening. There is a big key man risk here, right? Like, so something that Elon does, if he does open his mouth and it's really bad, as an example, he could, ruffle some feathers in the government potentially, which is a huge buyer of his products. There's a lot of competition that's coming up now as well that could be something that would, sway that. So it's a great company. I agree with a lot of the stuff you said. It's a phenomenal company. But the idea of valuation, it's 1.75 trillion valuations, 95 times or 94 times revenue. Morningstar had it estimated more around about 780 billion, so like a little less than half of what they're looking at. I think the valuation is dependent on the idea that investors are paying for a decade of future success that's going to be flawless. So that we always say in the markets, past performance is an indication of future success.
Yeah, someone described it to me as a call option on Mars.
Yeah, call option, exactly. So if this goes well and, it's baked in and some of these things, obviously all these things could happen, I think there is a big risk there on the execution. So there also is the governance risk. You're paying for Elon, like Elon's going to keep most of control in this IPO as well. But I think the other thing from a numbers perspective is you're expected to pay almost around $2 trillion valuation for a company that loses approximately $5 billion annually. So that's one of those things. If that's going to continue, I doubt it will. I think there is going to be, like you said, Starlink and all those things are going to be amazing drivers, but everything else has to fire on all cylinders for it to be long-term bullish. So we'll see about the hype. I know I don't have the stats in front of me, Greg, but somebody was telling me before the debate here that, so I didn't get a chance to add it to my notes, but there is a large percentage of IPOs that are down on the first day. Quite a big percentage there. So we'll see what happens with SpaceX.
That's the drama of Friday, right? If we actually start getting those trades on Friday, we'll start to see the appetite and for the issue and see where it lands by the end of the close. That's what makes it so exciting, right?
Yeah. It'll be exciting.
That first trade comes in, you start seeing, is it up? Is it down?
Yeah.
I don't know. There's a lot riding on this one. I'm not going to make any judgments. We'll watch it in real time. If there's a stock you'd like to see our debaters go head-to-head on, or a market topic you'd like us to explore on a future show, just send us an email. It's td.activetraderlive@td.com. And to learn more about the TD Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our website, and there you can find a little tab to open a practice account and try the platform risk-free. The tab simply says, also, join a live masterclass. That's another tab from the other one I was talking about this Wednesday. Right here, our very own Brian Rogers, 11 a.m., hosting an interactive session about TD Active Trader. It's going to explore all the main research tools it has to offer. You got to register for it. It is required, and that's actually open now. It is time now for On the Radar, the key events investors will be watching for the rest of the week. Now, here in Canada, we got the Bank of Canada. They're taking center stage Wednesday morning. That'll be tomorrow morning. They got a rate decision. We have an economy that's technically in recession, 2 back-to-back quarters of contraction. And then we had a jobs report just last week that really blew it out of the water in terms of the strength of the labor market. You put all that together, Street thinks the Bank of Canada is on hold. But, we'll have full coverage of it here and across our other programs. What are you watching?
Yeah, I just wanted to kind of piece together what we just came out of last week, Greg. We came out of a very difficult backdrop after the sharp sell-off that we saw on Friday. It rattled across the board assets, stocks, bonds, gold, crypto. Very few traditional safe havens were left untouched. This is all in fact what you said, the stronger than expected jobs report that came out in the US. It was a broad reassessment of interest rate expectations, almost like you put the nail in the coffin where there's always talks about, are they going, it's no more a question about holding or pulling back. It's the more hawkish tone now.
Could they hike?
Yeah, and so the Treasury yields responded. They climbed to the highest level since early 2025, and traders obviously increased their bets that the Fed Reserve could raise rates before the end of the year. So the focus now shifts to what we have in the coming days. We've got, coincidentally, tomorrow as well, we will have the CPI report coming in, and this will be kind of that affirmation that they're probably looking for. And then, of course, we just talked about SpaceX would be the bigger sort of market-moving event on Friday. But let's talk about CPI real quick. That's going to be due out tomorrow. Medium forecast by Bloomberg survey is about a 50 basis points rise in the headline rate and 40 basis points in core. Given the base effect, the year-over-year it will likely rise to about 4.2% from 3.8 on the headline and 3.1% from 2.8 on the core, respectively there. But alongside the release of the policy statement, the SEP, Summary of Economic Projections, will also provide the clearest signal yet of how the Fed prepares to respond to the new inflationary pressures. Correct me if I'm wrong, I think the FOMC meets next week.
Yeah, we got the bank hand tomorrow.
Yeah.
We don't get a double header. We got to wait until next week for the
Exactly. So we're going to hear leading up to that there. Right now they're in the blackout period with none of the Fed talking heads can speak at the moment. So that's what we're looking for. So if there's going to be a hotter than expected CPI print, that would reinforce the view that we're going to reprice and the expected path of monetary policy.
I want to see how Warsh handles that.
Yeah, it's going to be his first one in the helm. Yeah, so it'll be important what his tone and language is going to be there. But other than that, we've still got kind of the tail end now of the earnings cycle coming to a draw in the next coming weeks. And the one I'm looking at specifically is Oracle. So this is the company that I'll be spotlighting. They have the Q4 earnings coming out tomorrow after the close. This is just for everyone's purposes, the database giant that has quietly become the AI infrastructure powerhouse that we have today. So the report for tomorrow, investors are expecting to gauge really enterprise spending on AI. Following concerns triggered by Broadcom that had come out last week where they had weaker than expected results and what that would mean. So in last quarter, Q3, Oracle had significant organic growth. They both grew, EPS and top line grew 20% or more. Total revenue hit $17.2 billion, that was up 22% year over year, and cloud revenue surged 44% to $8.9 billion. But the real headline that we also want to see is the RPO, remaining performance obligations. That ballooned up to $553 billion. So this represents 8 years of Oracle's current annual revenue sitting in signed contracts that are going to take place. That number was essentially unthinkable 2 years ago. Also, the risk, we have to talk about that as well. They've just had $13.18 billion negative free cash flow over the past 12 months, and they've announced plans to raise another $45 to $50 billion financing to fund capacity expansion. So we're now going to companies that are starting to take on debt, and guess what? It's a bad mix with interest rates probably looking the other side now, and how the market's going to react to that. So the big key things to watch in the report will be the cloud infrastructure revenue growth, how it stacks up with the Q3 growth rate, the RPO trajectory, and whether F27's $90 billion guidance that they've given gets raised again or not, and that'll be the key to watch. We look at the charts, Greg. You can see that Oracle's kind of came out of its slump, broke out of its bearish channel over here. We had this big bullish candle push out here. This also meant that we saw the exponential moving averages start to take a turn and move towards the bullish direction. The big notable thing that I wanted to show everyone is that we are in sort of a firm bear trend right now, bull trend, I should say. We've been respecting this lower bound every time it's gone to this level on this trend line that we have. It seems to have bounced off of that price. We did get this supply zone at the 200 level. Just most recently in price action, it broke through it. We saw that big sharp move up and then reverse right now, but it is squarely sitting above the 21-day moving average. And also we had the 50-day cross above the 150-day after quite a drought of a spell there on this charts. So that indicates further that we've got some bullish sentiment building up again into this earnings print that we have.
All right, Hiran had his eyes on tech. You got your eyes on our furry friends, pets, Chewy.
Yes. Well, Greg, the market has taken a big bite out of Chewy more recently, like this year for sure. I don't know if you remember, this is putting you on the spot, Hiran, but do you remember, were you the bull or the bear case on Chewy when you did?
Oh, we did Chewy on the show,
We did it a while ago. I think I was the bull on this one.
You were the bull?
Yeah, I believe so.
You're big time wrong.
Yeah, I was big time wrong. Yeah.
Hard time. No, I think all of those kind of tech-based or remember like software-based companies did get hit in the beginning of the year. So I think it's one of those ones that's kind of undervalued at the moment. And I was looking at something on the chart I'm going to show in a second, but just to talk about Chewy, they have 21.3 million active customers. It's up 4% year over year. And auto ship is 84% of their sales. So they've really focused on auto ship. It's going to be that continuation of revenue, right? And there's over 10.5 billion in annual revenue right now, with 692 million in operating cash flow and 562 million in free cash flow. So that gives them a EBITDA of about 719 million. So I think the market has really kind of kicked them down at the moment, and has the potential to come back where they have earnings coming up tomorrow, and we'll see. So if we look at the chart, you can see on here with a level of support and resistance, I've drawn a price channel. You can see where it was trending down, but it seems to go in between this up and down, support and resistance within the channel on the downtrend. But you notice that it's hitting into support right now at around $20. And we always talk about the fact that there's that psychological pricing. It'll oftentimes bounce off or maybe go through that support level. I think it could potentially bounce. We don't know. Maybe it'll go back down as well, depending on what the market thinks of what they've been doing. But you've got an opportunity to look at possibly jumping back to, if maybe around 25 and possibly in that $30 range if it kind of goes back to previous levels. You can see on the RSI down here, it's showing a little bit oversold. So if it does come back up to this higher, resistance point, maybe we'll watch it for earnings, and if the market likes what it sees, maybe it'll do well. If not, we'll see if the dog has its day, or maybe it's going to end up in the doghouse again.
You mentioned this. I went to the website because I wanted to see. They do sell skunk odor spray because tis the season, right? Little skunks are running around in my neighborhood. I have a big bottle of it just waiting by the back door if my dog ever gets hit, which he has years ago. But this is what got me. So I go to the website. So here's the skunk spray. That's the problem you got to control if you got a dog.
Yeah.
But then there's a skunk plush toy. This is the wrong message to my dog.
What is going on?
A skunk is not your friend to play with. You see a skunk, you run the other way. He still hasn't learned that lesson, but I have.
Yeah.
Gentlemen, what a pleasure. What a great show. Good time.
Good job, Mr. Rogers.
Yes, I'll thank you.
Before we say goodbye, though, we have to decide who's going to be arguing which side next week when we debate FedEx. Here, and apparently you're in the hot seat. I thought we were going to make
Brian pick.
Brian decided to get revenge on Jay. So as always, there's a coin here.
Decides our fate.
The one TD is the bull. If it lands on the many little TDs, that is the bear. Here's the man on the hot seat. Let's not mess this up. That's a terrible flip.
Yeah,
it barely even moved. People are going to say, that's rigged. Boom. One TD. You got the bull case next week. Jay will be informed.
Jay's stuck with the bear.
I'm not sure where he is, but he's probably sitting on the edge of his seat just waiting.
Yeah.
Or he's enjoying his time off. Guys, great show. That is the show for today. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching. Man, it's like a skunk toy.